Hello, everybody, and welcome to the 38th edition of LM's Weekly Lab, our weekly program to cover all the developments relating to the markets. This week was very important for the markets, although it was a truncated week as far as the domestic markets are concerned, but still we had a lot of events to look forward to. Some of them were expected events and some of them were unanticipated events. I think one of the biggest unanticipated events was the substantial output cut which has been announced by the OPEC countries, due to which there was a spurt in the prices of crude oil. So we have the crude oil prices which has jumped after being relatively stable and subdued at the lower levels, and currently the crude oil prices is ruling close to $85 a barrel. So I think that was a big shocker as far as the emerging markets is concerned. The emerging markets clearly have been impacted by the crude oil prices. And the second, as far as the domestic markets is concerned, we had the RBI pressing the pause button. So I think keeping the rates unchanged, I think it's a big relief for a lot of sectors, particularly the banking and the real estate sector and the business sector as a whole. With me is Jash, and welcome Jash.
Thank you, sir.
He will be guiding us about the developments in the domestic as well as the international markets, which will be followed by the sectoral outlook from my side. So Jash, kindly take us ahead.
Thank you, sir. It's great to be back. We are a day early this week because tomorrow is a holiday. So we have a market wrap on Thursday today. Coming to Nifty levels, last week we had very rightly pointed out that we are seeing some sort of reversal, and we anticipate the Nifty to go to 17,700, and today we think it made a high of about 17,650. So Nifty is on an uptrend, but 17,700 levels is very important. We have to see if it sustains or not. The market has proved to be bullish. It has been on green this week, and also last 3 days of the last week, and I think it should move up, but we have more events in the coming week, as we have the earnings season starting. We'll have the ITs coming into play. IT is heavily dominated by the US markets, as their job data and their order book is what will lead to the rally or downtrend on the IT. So we have to wait and watch for that. But a few IT companies had their monthly numbers out in the last week, and I think they were pretty good. There will be more light thrown by Nirav sir on the IT companies over there. I think coming back to Nifty levels, I think we should still keep selling on the rise, because as I said, the valuations were very has become relatively attractive. But we still need to wait and watch, as the global scenario is still dovish. And the second important event was the rate hike that was supposed to happen. We very rightly pointed out last week that 25 basis points we are expecting, but in our opinion, we don't think it was necessary, and RBI exactly did that. They did hit a pause button. They are not blindly following the foreign markets, but they have obviously said that if needed, they'll be increasing in the future. But as very rightly analyzed by us, we have hit a pause button. I think that's a huge relief, and we are stating that we are not dependent on the global scenario. Of course, it affects us, but we are not dependent on that. We are quite independent on that side. Coming to the crude oil prices, crude oil is at $85 a barrel. The cut is only about 1% of the total output, and the increase is 8%. We feel that the emerging economies are heavily dependent. That's why there's such a strong reaction. Otherwise, 8% is the increase on 8% is quite a bit. It's not justified. But I think that it's a shocker. So I think it will stabilize eventually. But for India, I think $85 is still very comfortable, because we also get a huge supply from the Russia. So our export bill, import bills,
policy
procurement is very flexible
favorable for
and
India,
favorable,
at least at the moment.
Yeah, so I think we're not paying a very high amount for procuring the oil, and I think that sums up the global and domestic scenario. And I'd like to hand over to Nirav sir for sectoral light. Thank you.
Yeah, thanks, Jash. So I think the gist of what Jash has said, that sell on rise would be the prudent strategy in the domestic markets. So that is what is important from an investor's or trader's perspective also. That is point number one. Second is today the gist of what the RBI governor said. They are monitoring the international situation with respect to the banking developments, what is happening in the banking scenario over there, the regional banks as well as the bigger banks, banking developments, and the second is the crude oil prices. Third important factor being monitored by the RBI is the prices, the inflation scenario. While this time we have had a record Rabi harvest, and that is likely to ease off the inflation pressure, already the arrival of fresh wheat into the market has eased off the prices a bit. So I think that is positive as far as the overall economy is concerned. Taking all these factors into account, but also taking into account the fact that the prices of cereals, milk, and fruits, these are adding to the inflation pressure within the economy. That's what the RBI governor has
I think the milk price was increased by 2 rupees in the last week.
Milk price has been increasing, continuously increasing during the last 1 year because of the lumpy skin disease. And secondly, there is the shortage of fodder. Fodder has become more expensive, as a result of which India is also contemplating import of milk products during this forthcoming months. So that is one factor which is adding to our inflation pressure. Coming to the different sectors, first of all, we start off with the auto sector. Auto sector stocks were under pressure this week due to the FADA data, and FADA says that the near-term outlook looks very, very challenging. There's going to be a moderation in demand as far as the auto sector is concerned. PV sector already seeing a moderation in demand. Commercial vehicle continues to do well, will likely do well, has benefited by pre-buying in this month. We have three-wheelers which has performed exceptionally well on the back of e-rickshaws, which have been doing quite well. Tractors has reported the lowest possible growth in the last 1 year. And I think two-wheelers have been reeling under pressure because rural India has been under pressure, and there has been a double whammy as far as two-wheeler space is concerned. They have been impacted by exports as well as poor exports as well as poor rural demand. This week we had the auto sales numbers, and the two stars which emerged out of this were SML Isuzu and Atul Auto, which have reported very, very strong set of numbers. Tata Motors is a big gainer in trade today, up about 2.5% in trade. Next we come to auto ancillary. In auto ancillary, I think Bharat Forge numbers have disappointed a bit, but we have a LM weekender, which is RK Forge, Ramakrishna Forge, which has crossed the 300 level today, very, very strong in trade, and our target for the stock is 327. The third sector is capital goods. This capital goods has been a very big gainer in this week. We have infrastructure space. Infrastructure, we have L&T, which continues to do very, very well. L&T received a major order, a mega order basically for its hydrocarbon segment. So I think L&T also continues to do very well and is likely to be a big gainer in the time to come. In the oil and gas space, I think we continue to like Reliance Industries Limited because the prices of crude oil have been going up and natural gas prices are also likely to move up. So I think it's likely to have a positive impact over there. Next sector which we are covering is FMCG sector. In the FMCG sector, we have commentaries from three companies, Marico, Dabur and Godrej Consumer Products Limited. While the commentaries from all these three companies were quite good, we saw that these three stocks did not react at all to this commentary, and it was the other way around, that HUL and ITC were the stocks which went up in trade. So FMCG is kind of a different picture which has emerged, but overall a picture of strength, and we are seeing green shoots of recovery. Next is IT. IT is going to be influenced by the global scenario. It's going to be heavily influenced by the developments in the global markets. So the commentary from the IT sector is going to be very, very important before we take a call on this particular sector. And we have pharma. Pharma is showing relatively positive signs of moderation and stability. We are seeing a lot of stocks which are trying to consolidate and start moving upwards. Then we have is cement. Cement, I think Ultratech Cement, Shree Cement, JK Cement and Dalmia Bharat, they continue to do quite well. Finally, the star of this particular week can be called the realty sector, because it's now trying to bounce back, because the interest rate having been left untouched, I think is going to be a big positive relief for the realty sector. In realty, we like DLF quite a lot, and today the stock is showing signs of breakout, and it has given very strong performance. It has got a ratings upgrade.
Correct.
And it's likely to bounce back in a very big way from the current levels. So watch out for DLF. It looks pretty much encouraging on the charts. And as far as other stocks are concerned, I think today there's been some news that discretionary buying, there is going to be some cut down. So we are seeing stocks like Dabur, DMart, Nykaa, Shoppers Stop under some sort of pressure. So watch out for that space. And defense sector generally continues to do well. And I think rest, I think we have covered all the developments. I think it's going to be stock specific development. One stock again which I'd like to cover towards the end is the stock of Great Eastern Shipping. This stock has a potential to move up substantially even from the current levels. If their strategy hits the right button, then I think Great Eastern Shipping is a stock to watch out for. Finally, our weekender stocks continue to do very well, whether it is Titagar Wagons or Action Construction Equipment or RK Forge. So that kind of sums up our program for today. I think I'll give the concluding remarks to Jash. So
thank you, sir.
Yeah.
Next week is going to starting next week is going to get very busy because of the earnings season, and watch out for stock specific gains and watch out for our videos every week. Thank you. Please hit the like, share and subscribe button if you have not already done it. Thank you. Bye-bye.
Thank you very much.